Hi, I'm Jimmy. In this video, I'm going to walk through 5 of my favorite value ETFs. Now, this video is following up on my most recent video on growth ETFs, and that was after a couple videos I did on dividend ETFs. So, after doing those videos, I thought it made sense to do a top value ETFs video. If you're curious, I've got links in the description below to the other videos. Okay, so let's jump into our first value ETF. First up, we have the Vanguard S&P 500 Value ETF, ticker symbol VOOV. They have a dividend yield of about 2.2%. They have a current PE ratio of about 20x. And just so we're all on the same page, the S&P 500 currently has a PE ratio of about 21x. So when I was looking for good value ETFs, I tried to stick with value ETFs that had a lower PE ratio than the overall stock market, which I used the S&P 500 to represent. In theory, that means it's a better value right now. Now, this was tougher for some of the larger cap value ETFs out there. But this S&P 500 Value ETF is a good example of an ETF that pulled it off. And if we're curious, they have an expense ratio of about 10 basis points, which is pretty good. And as we may have guessed from the title of the ETF, well, this company focuses on value stocks that are already in the S&P 500. And then when we look at their top holdings, well, we can see that they have a decent variety of companies that are in the ETF. Now, this may be better illustrated if we look at a pie chart of the sectors that they're involved in. Now, what I found interesting about this particular ETF is that they hold slightly more than 400 companies in a value ETF comprised of companies from the S&P 500, which has about 500 companies in it. So they're taking a large percentage of those companies, presumably the value ones. So clearly they're going to have a large correlation to the S&P 500 since they're holding a large piece of the S&P 500 in general. But I thought it was appropriate to include this type of ETF because if we jump back to their top 10 list real quick, well, in theory, many of these larger companies are going to offer a certain amount of safety because of their size and stability, their ability to hang in there in almost any market. So if that's what our investment portfolio calls for, this could be a perfect value ETF for us. Okay, now if we want a bit more diversity, at least if we want companies that are also outside of the S&P 500, well, up next we have the Vanguard Value ETF. Ticker symbol VTV. This value ETF has a dividend yield of about 2.6% and a PE ratio of about 19x, and they have a fee of just 4 basis points. Now, once again, this 19x as far as the PE ratio is concerned isn't too bad when we compare it to the 21x of the S&P 500. Then when we look at some of their top holdings, well, once again, this is among the larger, more stable companies out there. Don't worry, I'm going to break away from these large cap, mega cap names in a second. And then when we switch over to the diversification, well, it looks pretty good. Overall, they're fairly well diversified, which is right in line with what we might hope for from a Vanguard Value ETF. Okay, now we're going to switch over to a Fidelity ETF. Now, I've gotten a few requests to look at some Fidelity ETFs in general, so I wanted to throw one in here. Now, if you know of any other good Fidelity Value ETFs, if they look good and maybe they have a better fee or better diversification, whatever it might be, please put that in the comments below. So this one is the Fidelity Value Factor ETF, ticker symbol FVAL. They have a dividend yield of about 1.8%, and they have a PE ratio of about 19x. Now that's the same as the last Vanguard ETF that we looked at, but still it's less than the current level of the S&P 500, which is about 21x. And they charge a fee of about 29 basis points. Then when we switch over to their top holdings, well, this is the main reason I wanted to include this ETF on a top value ETF list. It seems like some of these companies have a decent amount of growth qualities, and a lot of these companies are high quality companies that I'm a big fan of. For example, Microsoft I'm a big fan of, JP Morgan, Chase, Visa, just to name a few. And I think that these companies can add a certain amount of stability to this ETF. Plus, this ETF also invests a decent amount in mid-cap value stocks, which I think is a nice mix in my overall opinion as far as value ETFs go. And once again, switching over to the diversification, they remain fairly well diversified, which I think is important for this type of investment. Okay, now let's shift away from the larger, more typical value ETFs that we might look at. Now I've got a couple examples of, I think, ETFs that offer a more immediate opportunity, at least in my opinion. Okay, next up, we have the iShares MSCI Value ETF, ticker symbol EFV. This value ETF has a dividend yield of about 4.8%, which is impressive, and then they have a PE ratio of just 14.5x. And when we compare this to the 21x of the S&P 500, it's really quite impressive. And then they have a fee of about 38 basis points. Now we might ask, where are they finding companies to end up with an average PE ratio of 15x? Well, first, let's look at their diversification. And I just want to check that box off because they are fairly well diversified, and I think that's important. So I'm happy with that. Now, let's look at some of their top companies. And we may notice that this is a very different group of companies than what we've seen so far. Why, we ask? Well, these are the countries that this particular value ETF is currently invested in. And frankly, I'm a big fan of diversifying outside of the United States at this point. Like I said, right now the S&P 500 is trading at about 21x, and as far as the PE ratios go. And that could very well be on the high end, but there are other opportunities around the world that could offer some at least short to medium term opportunities that the US isn't offering from a value perspective. So I think that this ETF does a decent job of hitting some value spots around the world. Now, I was actually looking for a bit more exposure to the United Kingdom, which I think has some longer term opportunities, assuming, of course, that they can eventually sort out Brexit and that whole mess that they've created. And for that, we now shift over to the ALPS International Sector Dividend Dogs ETF, ticker symbol IDOG. They have a dividend yield of about 5.8%, which is once again fairly high for a value ETF. And then they have a PE ratio of about 18x, which isn't too bad either. And they charge a fee of about 50 basis points, which it's the highest one on our list, but given their more specialty design compared to many of the other value ETFs that we've looked at, I'm okay with paying a slightly higher fee. Then when we look at their sectors, well, just like all the other choices that we've seen, they're fairly well diversified. This is another well diversified value ETF. Then when we jump to where they invest in the world, well, to me, this is well diversified as well, with 20% invested currently in the UK, which I personally think is a decent amount. And I think that they bring a lot of diversification to the table that a lot of the other ETFs that we've looked at so far didn't bring. Now, here's the basics of how this particular ETF works. It's based on the concept of a strategy known as the dogs of the Dow. So basically, what they do is that they invest in companies that have a higher dividend yield as a result of the stock price falling. And assuming that the original basket of stocks that they're looking at are decent stocks, well, we would end up with a value portfolio that also does a pretty good job of paying out the dividend. The reason being is that because the price of the stock and the yield, the dividend yield, are inversely related. So if the price goes up, the yield, the dividend yield, assuming it stays the same, goes down. If the price falls, the yield goes up. They buy all the ones that the yield goes up. They buy the biggest ones. So in theory, you're buying value stocks. So that's what this ETF does, except for they're doing it for international stocks, where the original concept was focusing on companies from the Dow Jones Industrial Average. Now, I actually did a video where I tested out the dogs of the Dow strategy going back the past few years to see if the concept of the strategy really worked. And I reviewed the results of that test, and I went in a bit more detail of how it actually worked. If you're curious, it's actually a fairly easy strategy to implement. So if you're curious, there's a link right here. There's a link in the description below for that video. Could be a good next one for you to watch if you're at all interested in this ETF or generally how some interesting strategies work. And I want to thank you for sticking with me all the way into the video. I really appreciate it. Thanks, and I'll see you in the next video.